Welcome into the second carrier update of the morning presented by Uptake. I'm Tony Mulvey, joined by Donny Gilbert. Donny, it's Monday. That means we're going to talk about the reefer market.
A little bit of reefer. Pulling up here, looking at ROTVI here in the blue, this is the reefer freight volumes. We still see that they're still climbing up, which is good, and it's tightening the market a little bit. Here, you look down here on the yellow line, and you see reefer tender rejection rates. Now, it's not a lot, but it's gone from around, a little bit above 6% up to 7%. So it's been climbing in the right direction. It's kind of tapered out here for the last couple of days, but still keep an eye on this. It should normally get stronger as we get through the week. And we're also getting close to, we're getting kind of towards the end of the month, and you're going to see it pick back up then again. So the reefer finishing for the end of August should look decently strong, considering what's been going on.
Yeah, I mean, barring a collapse in reefer volumes, I mean, you're going to see volumes exit the month higher than where they started, which, I mean, if you look historically, it's kind of true. I mean, naturally, in August, you see reefer volumes a little stronger than where they start because you come off of such a high peak, typically around the 4th of July. But, I mean, when you start looking at it, you are seeing this tightening, but we're at basically 7.1%, which is low historically when talking about reefer rejection.
Yeah, and as we get on in towards September, we're going to start seeing some potatoes, other produce coming out of the Pacific Northwest. You'll see those start to come to harvest as well, and those will kind of help those regions out because those regions are still fairly weak when it comes to actual rates. A lot of good products are coming out of there, but the rates are very weak. Let's pop in here and let's kind of see if we can see what the contracts are for reefer. Now, this is a pretty big change here, and I brought it up here. Right around the 1st of August, we were at $2.42 a mile, and we've climbed up now to $2.56. So, a 14-cent increase there in just an 8-day period.
Yeah. So
we see a lot of pressure here on the contracted markets, and this is kind of telling us that the reefer market right now is not weakening.
Yeah.
There's demand. There's tightening, and this has pushed up contracted rates fairly quickly here, fairly aggressively.
Yeah, I mean, you don't see moves like this very often. I mean, on the dry van side, you look at it, it's almost the exact opposite of what you're seeing here in the reefer market. But I mean, these moves are very aggressive, and they're they're just happening at such a pace. Like the 12 or 14 cent increase throughout the entire month, not really a surprise, but seeing it in 7 days is the surprise.
So, reefer's a smaller market, you get a lot more volatility in these markets.
Absolutely.
Let's pop in and see if we can see some changes here. So you look out on the West Coast, you see they're a little bit red, but rejection rates on the West Coast are very low already because of the higher fuel prices, and they're already falling in compliance. So I don't expect to see a lot of change in rejection rates there. Here in the middle, a lot of poultry is I almost said raised here through the middle here. And of course, we got a big thing sticking up there, Joliet, big warehousing market. So keep an eye on that. So this is where most of the change for the reefer market is happening, and then some up here in the Northeast. A lot of people don't want to run the Northeast, but this Midwest here is something that you probably want to keep an eye on.
Awesome. I'm sure we'll check out some of those markets in a later carrier update. But right now, we'll take a quick break. We'll be back with more Freight Waves Now right after this.